I think it's more important that Apple gets this right out of the gate rather than come out with something that's half-baked and give a lackluster user experience. I think that could sour them, and I think that Tim Cook and team need to deliver. I'd rather wait, have them get it right.
Thanks, Trader friends, for joining us. And I have a very special guest to introduce to you. He is the one and only Chris Versace, CIO of Tematica Research, joining us all the way from New York. Chris, how are you?
I am fantastic, my old friend. Very, very much looking forward to chatting with you today. It has been a while.
I mean, like, it's so good to welcome you back. Obviously, you had to be on my show. Just give our new clients and new viewers a quick roundup of, your experience. Obviously, I can do it no justice. I mean, we cross paths in New York, but now I'm in London and you're in New York, but we're still together. Give us a quick overview of your experience.
Sure. So, the vast majority of my, work life, it was tied on equity research, both at Solomon Brothers, DLJ, and then FBR. And really through those years covering industrials, machinery, and then ultimately technology, I developed this thematic framework that doesn't look at siloed sectors. Rather, it looks at emerging structural shifts across sectors, allowing us to have a thematic perspective. I use that at Tematica Research, and I also use it to manage the Street Pro portfolio. And I would say that's really a nice summation of it, but I'm happy to delve deeper if needed.
Now, we've delved into so many themes in the past, but let's look at some key points that you are keen on right now. The first one, of course, is one stock that pretty much everyone, including their grandma and their dog, has in their pension fund, Apple. You have had a change of heart when it comes to Apple.
Well, not really. I think we've been long-term owners of Apple in the Street Pro portfolio, but we're always looking for what is the next catalyst that can propel the stock higher. And there's really two things at play here with Apple. One is we are seeing memory chips really shift their capacity towards AI and data center, where demand is extremely strong. That's kind of putting some restrictions on the availability of memory for smartphones, PCs, tablets, which of course is part of Apple's, product lineup. So in the near term, I think we need to be a little cautious on that front. But the catalyst that we were waiting for was the final release of this AI-enabled Siri, which is, we've been waiting for it since as far back as 2024. Yeah.
Since I've been talking to you over, me being in London and you in New York, you've been waiting for this for a very long time.
Correct. And the idea is that this will be a feature that will drive a large upgrade cycle for Apple, given the existing base of iPhones. Now, it's been expected that this would finally start to happen, coming up with a beta release in later this month, and then a full release in March, and then a next iteration later this year. And now we're reading that apparently in testing, Apple has hit some snags. And to me, this is just going to be a bit of a delay. I think it's more important that Apple gets this right out of the gate rather than come out with something that's half-baked and give a lackluster user experience. I think that could sour them. They have been late on the AI front, and I think that Tim Cook and team need to deliver. I'd rather wait, have them get it right.
So when's a great time? Because, I've been waiting on this stock as well to come out of that sideways trajectory. As you know, I'm a technical analyst as well. So when I look at the charts, I look for the breakout, right? The confirmation there. And right now, to me, Chris, the stock does not tell me that it's ready to break out just yet. It seems still stuck in that 270, 280 range.
Yeah, I mean, look, near term, we are going to have to contend with these questions over what are hardware shipments, for the March quarter, and how are we going to start off, the June quarter. To me, now that we have this known about the delay on AI-enabled Siri, it's really going to make Apple shares a second half of the year story. I say that because we'll get one or two iterations of the next iOS software that will contain some pieces of this AI-enabled Siri. Then we have WWDC with the next iteration being announced. And then remember, in the second half of the year, Apple is expected to unveil its first foldable iPhone. So there's a lot of reasons to think that the momentum for the iPhone can return in the second half of the year and be potentially far stronger with a more proactive upgrade cycle.
Now, McDonald's is one that we talk about a lot too. As you know, that I don't normally touch retail or consumer retail stocks, but I do like watching them. I do have Costco actually, because I do think that it's good in times of uncertainty to bet on consumers who do have money but want to be cautious in their spending. McDonald's, you've got an interesting play on this one.
Yeah, so we're not involved with McDonald's. We've actually been following it kind of on the sidelines to see how can the company kind of regain ground amid what you're describing, a more cautious consumer. And they have leaned into value meal pricing, which we can see in the comp sales that they reported, north of 5%, really kind of a standout in this environment. But the issue that we have to contend with is if you're leaning into value, can you still make money on that? And the issue that we found is that the operating margins, didn't really improve on a year-over-year basis despite that volume increase, and they're actually down on a reported basis compared to what they reported in the September quarter. So that has us really kind of cautious on that space. Coming into the current earnings season, because of the push-pull of input inflation and the increasing difficulty of passing through those price increases, we've been really focused on margins. This just simply reaffirms our view that you have to focus on companies that can continue to deliver a combination of pricing, volume, margin improvement.
Is there a real concern out there because over the years, these obesity drugs, your Wegovy or semaglutide, all those drugs that cause a lot of mood music surrounding the fact that maybe McDonald's doesn't have the right mix anymore. Maybe it's not changing its offering fast enough. Is there any anecdotal evidence on the ground that it's starting to suffer as a result?
Well, the comp sales at McDonald's would kind of push back against that notion. But I think if you look around at other companies, whether it's, Coca-Cola or even, I think last night, early this morning, Magnum Ice Cream reported, and they're saying that their business is being impacted by these GLP drugs. So I think we need to continue to monitor it and watch it. But, as it relates to McDonald's and other fast food, it's kind of an interesting dynamic, right, between the potential GLP impact and the trade down where people are trying to stretch the disposable spending dollars they have. Personally, I would stick with Costco. We own it in the Pro portfolio. We also like shares of TJX for that very reason.
Right. And also, we saw rival Pepsi, to Coca-Cola, saying last week that it was going to cut prices on snacks like Lay's and Doritos, just showing how cautious consumers are at this point in time. So many other stocks to get across the line. I mean, we have Cisco, we've got Motorola. Which one do you want to do first?
Let's talk about Motorola Solutions, because this is one that, if we look at Motorola Solutions and even one of its key competitors that we own in the Pro portfolio, Axon, they have been dragged down with a lot of the other software stocks. And I would say it's a misconception because these companies are bringing, let's just call them productivity solutions to public safety, whether it's state, local, federal government, or international. And it's a combination of devices, so hardware and software. But because of the shortage, especially in the US, of new police officers, public safety has to really rely on enhanced products to drive productivity. That's great for the higher margin software services business, which is also a recurring revenue business. So Motorola came out, good numbers, record backlog, just reaffirming a lot of these positive things. So, what I would say, what's good for Motorola, good for Axon.
I do like the share price action as well. Looking like a very strong upward trend there. Its price action, the nose firmly above the 20, the 50, 100, and 200 EMA now in a very strong green candle after those earnings. Right, Cisco Systems.
Yeah, so Cisco, kind of an interesting story, pulling back despite very strong results in its networking business, which actually exceeded expectations. I think some of the shortfall was really more on the cybersecurity side, which is kind of interesting, and I'll talk about that in a second because of what we heard from Checkpoint Software this morning. But for Cisco, when we think about networking, let's just step back and think about what AI adoption is doing in terms of network capacity, chewing through it at a rapid rate, very similar to what we're seeing or have seen with the adoption of video. And if you put those together, AI and AI-generated video adoption, that's a very powerful tailwind for network capacity demand, but we're also seeing IoT and other devices as well. So, I like that, what I saw from Cisco. I think it's very good for Arista Networks. I think it's very good for other chip companies that are involved in the networking space, Marvell, Broadcom, for example.
Now, just some looking at the shares for investors in this, they would be forgiven for thinking, whoa, that's quite a fall there. And actually, it's crossed the 20 EMA and also the 50 EMA and is now at around 77. What time frame are you looking at for perhaps the shares to perhaps move higher? Or is this going to be a short for now and maybe wait and see?
So we're not involved with the Cisco, but it is one that we have looked at from time to time. I think when you see pullbacks like this, especially this environment, they tend to be rather extreme. Mm-hmm. But at the same time, I think when we look at a lot of the other data points that we're getting about that AI adoption, about that rising network capacity crunch issue, I think you wait for the stock to settle, maybe find its footing, perhaps test some technical support, and then start looking to accumulate. I say that in part because we are also seeing Wall Street lift some price targets for Cisco. So I think this is one of those dynamics where, and we've seen this before, that a short miss relative to expectations, a stock gets punished, let it settle out, maybe circle back.
Thanks very much. And that was a McDonald's. And also we talked about Apple and Cisco and Motorola as well with Chris Versace all the way from New York. Chris, of course, the CIO of Tematica Research. Always a pleasure having you on, Chris. Look forward to seeing you in the coming weeks.
Can't wait for it.